In this video, we will discuss if real estate is a better investment than just investing in ETFs, for example. We will talk about ROI, so return on invest. We will also talk about flexibility. And in the end, we will probably discuss why you should do both in the end. But let's first of all discuss why real estate is stronger from the ROI perspective. Let's say you buy one apartment and you rent it out. So let's say you achieve 600 euros rent and you have 800 euros costs for property management, maintenance, and the mortgage. Okay? So in the end, you invest 200 euros out of your own pocket to buy this apartment. So let's say to buy an apartment of 200,000, you have to invest 200 euros per month. Okay? Let's consider an appreciation of 2% for this apartment, just inflation. Okay? Without location, the location is not becoming better and not more promising regarding the real estate market, but let's only say 2%. So you have appreciation 2% per year, which means for 1 year you earn 4,000 euros with this real estate investment by investing 200. Okay? So let's say after 10 years, before compound interest effect, let's make it easy here, you have 40,000 euros profit just by inflation. So let's say you invest in the stock market and you have 200 euros that you invest monthly, same as here. Okay? So you invested 200 euros, you do it 12 times a year, so in the end you invest 2,400. And now we consider, let's say 10% interest per year. You have 10%, so you would earn 240 euros in that year. Also, after 10 years, before compound interest effect, to have easy numbers, 2,400 euros profit out of this investment. Both is obviously more because of compound interest effect, but let's leave it here. So you see, real estate is significantly stronger. On top of that, you don't invest 200 euros over 10 years because after 3 years, after the first rental increase, probably, you already have, let's say, 800 euros. So 800 euros minus 800 euros results in zero contribution out of your own pocket, which means you also invest significantly less out of your own pocket. And this is just if we consider 2%. 3 to 4% is more likely than just only 2%. So you see, from ROI perspective, it's significantly stronger. We could even say now, yeah, but we have to invest 20,000 euros out of our own pocket to actually buy this apartment. Yeah, okay, 40 minus 20, still 20,000 euros profit. So still stronger. And typically you don't plan to buy real estate for over the next 10 years. And this would be even tax deductible. And for tax benefits, we're not talking about this right now. If I would include also tax benefits, real estate would be even stronger. Because let's say after 10 years, you sell this apartment here. You sell this apartment, if you do it after 10 years, the profit is fully tax-free. If you sell ETFs after 10 years, for example, you have to pay 25% capital gains tax. So this is even minus 25% on the profit. Okay? So you see, real estate is definitely stronger, especially if you would like to build wealth long term. It's the reason because we take a loan of 200,000. You don't invest 200,000 out of your own pocket because we take a loan from the bank for 200,000. But the appreciation of the property is working on the 200,000 and not your equity. So as an individual, real estate is the only option to actually create such a big leverage. Because if you go to a bank and tell them, please give me a loan for 200,000, I would like to buy stocks, they probably laugh at you and kick you out of the bank, you know? But if you say, yeah, I would like to buy one apartment for 200,000, they say, yeah, here are 200,000 euros, go for it. We sometimes don't even need equity capital because they know that it's working. They know that this is a safe investment because otherwise a bank would never give you 200,000 euros without knowing you, okay? But why would I definitely suggest to also get into the stock market and also invest some money there? Because the big disadvantage of real estate is that the money is in the apartment, in the building. You can't just easily take out 20,000 euros if needed, if any opportunity pops up, for example. So what always makes sense is that you have a combination out of assets which are return optimized, so on return on investment, and you have assets which also give you returns but are more optimized for flexibility, or let's call it peace of mind, okay, which is also really important actually. So you see advantages, disadvantages. The question is how much money goes where, how much do you invest in real estate, short term, medium term, long term, in the future when your income is changing. What about your stock portfolio? Also different time horizons there. So you see, it's a pretty complex topic. This video just serves to show you why you should definitely consider buying real estate, because you have definitely the biggest profits if you go in a real estate investment, why we have a certain security. If we obviously consider crypto here, you might have higher profits, but also significantly higher risks. And in my opinion, real estate is the center. You have really, really high returns, but also lots of security. So if you would like to have help creating an investment and real estate strategy, especially combined, feel free to visit our website, register for a free initial consultation, and we will see what would be the best in your situation. Talk to you soon and take care.